What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, I'm playing all sorts of dubstep in the background. Where's Hefe when you need somebody to cheer me on? Come on, millennials. Find your way out of your parents' basements and let's start talking about some stocks. What's up, everybody? Moises, welcome. I know that last name. You wouldn't be related to Dr. Paul now, would ya? Trevor, how you doing? Good to see you as always. Joanna, welcome. Richard, thanks for the email yesterday, my friend. I'm sure a few more of you are going to trickle in here. And we've got a lot to talk about. So, yesterday, I suppose, I don't want to call it going off the rails, but I spent some time, a lot of time, inside of the chat room yesterday, so that was a lot of fun. If you're not with us on the chat room, just like the rest of this madness, it's free to join. The address is going along the bottom of the screen here. We're there pretty much every day, pretty much all day every day. I'm not in there all day every day. I try to make as many appearances as I can. So you can feel free to leave questions for you there. Eventually, I end up getting to them. And there's a lot of people in there, lots of support. It's a nice little support group. Wouldn't you say, Trevor? Trevor's in there pretty much 24 hours a day. Mr. Wallace, how you doing? Pando's been in there quite a bit, too. So we're talking about more than, you know, we're going to start changing even what these are called and how these are done. I've got an idea. It's starting to evolve. We're going to mess around with it here in the short term. So we're gonna go more macro with it, and I'm basically gonna spill my thoughts into this and let you guys, you know, ask questions, which I normally do anyway. But these are gonna take a little bit more of an open format, less of a formal, you know, one stock where we go and we just drill down on it, boom, 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 boom. I think what would be beneficial, and you can tell me, of course, I want you all to tell me. What if we did something like on a Monday? You know I hate Mondays, but if we did it on a Monday and as a group we kind of went through and looked at who was going to be reporting that week and kind of came up with a game plan for that week, and then would do even a preview sort of thing, right? And then go ahead and on the day of and take a more in-depth approach. I think that's the kind of stuff that I want to start doing. And look at Kurt hitting it on the head. Hey, let's look at take two after Nvidia. Why not? Hefe with the multiple Ys. Have you seen American Vandal on Netflix? If not, it's absurd. American Vandal is it's like rated R. It's terrible. It's very sophomoric, but it's hilarious. I have a sick sense of humor. What can I say? It's fantastic. But if you're not twisted in the head, don't look at it. And it's actually very offensive. So, Bourdain, all the way from Romania, right? How you doing, sir? Jonathan, what's up? Tracy, as always, how are you? AE01416, what's up? Is that hexadecimal? All right. Let's look at this first. First things first, I want to look at the S&P before we look at anything else, right? Just because the market has been so crazy, right? And the great part is it's given us this new fib structure. So I can finally ignore, I was drawing targets, retracements, all this sorts of stuff going back as far as I could go back. And now I can focus on I know, AE, I'm just... now we can focus on a much more succinct, tighter structure, which is great. We can even drop down this. Let's look at this. Hourly. Yeah, Trevor's always in there. We've had some really good discussions on volatility during all this madness too, so that's good. If you freeze, just go ahead and refresh. That'll happen from time to time. Even looking up 2 weeks out, yeah, we can do stuff like that too. The world is our oyster. We could do whatever we want. All right. So now I'm using an hourly chart on this fib structure, and this is going to be the game plan for the rest of the week, basically. Told you yesterday to watch out for 2732 here on the S&P 500. Intraday, we stopped shy of that. This is an hourly chart here, okay? So now the market coming under a little bit of pressure. This is a great thing about fibs. You have larger fibs and then you have smaller fibs. I see a few of you having some buffering issues. I'm looking over at my upload here and I'm looking okay, so. Oh, now it's getting a little wonky. Uh-oh, we could be yelling at Comcast again. So anyway, so here I'm going to draw another fib. So you can put fibs inside of fibs. That's true. And then what you want to do is you look for what's called a confluence of support. It is. No, guys, I can see. I am getting some issues here on the upstream. Good old Comcast coming through for me again. Thanks, Comcast. Wonderful. I see my my buffering rate bouncing all over the place. It's fantastic. Yep. Oh well. Anyway, so when you draw fibs inside of fibs, you look for what's called confluence support or confluence resistance. So that's when you see the fibs on one, the smaller one, correspond with the fibs on the bigger one. Okay? So if you get a twofer, something like that. Now here, we're not really getting any of those, save for this 23.6 sort of over here, right? Which is basically 2,700. Yeah, how do you short my internet? I don't think you have to. I think you just yell at Comcast. So that's why this 2,600 level, I think, is becoming a little bit important here. But I'm surprised that on this gap from this low, basically, up to here, we're not seeing the market interact yet. But I would keep an eye on, obviously, 2,700 is kind of a psychological level. Below that, what do we have? 2676. So there are some levels down here. 2653 is way down there. But I think the first step is 2676 and then 2660. So keep an eye on that intraday on the market. Again, we're going to be bouncing around all over the place because that's just what the internet or the market wants to do with us. And the VIX still going to be bouncing around all over the place. Obviously, the short-term spike in volatility was crazy. They blew up XIV the other day. That's that inverse volatility ETF. And that forced a lot of buying, something like 282,000 contracts that Credit Suisse had to come in and buy in the VIX. They ended up just buying the front month, and that's what happened. Huge spike up, so there you go. So that's still working itself out of here. Be very careful, my friends, when you're messing around with UVXY right now, because we've got backwardation right now, which is not what you typically see inside of this. So what do I mean by that? VIX Central. So backwardation occurs when the front month is more expensive than that back month, because typically it's like this, right? Goes up like that from bottom left to top right, not down this way. So this number right here, this contango number, contango is the normal state of the VIX market. When it's negative, that's called backwardation. So what that's doing, in effect, is helping out UVXY, because that's the number that normally drags UVXY down, because UVXY is 2 times the 30-day average of volatility. So in order to get the 30-day average, they're constantly selling one contract in the front month and buying a contract in the back month. So when this is lower and this is higher, that's working against you. But when this is higher and this is lower, it's working for you. So be careful on messing around with any of these UVXY fades right now. I think you're better off just using the VIX, and that is if, in fact, you want to play it that way. Why are we talking about volatility? Well, because volatility has a whole lot to do with options, right? So when we see the VIX at elevated levels, it means that typically you're going to end up having increased implied volatility in options across the board, okay? So something to keep in mind, and it should kind of push you, maybe tilt you just a little bit more towards doing things on the credit side of the equation. Okay, credit side of the equation. All right, but today, what are we talking about? We're talking about Nvidia. So we kick things off as always with the price consensus and EPS surprise chart on Nvidia, and it tells you why in black and white and green and blue and red why Nvidia has gone on such a incredible streak to the upside. Look at all these earnings beats. So first of all, the black line corresponds to the right y-axis, which is price. The green arrows rather, earnings beats. The red arrow is an earnings miss. Yep, there's one of them. The multicolored lines represent the evolution of our Zacks consensus estimates over time and correspond to the left y-axis. And you can see here that despite these estimates coming all the way up for 2018 up to $5, almost $5 holler, but the stock's at $240, right? So still rather rich in terms of a PE. We're going to look at that in more detail when we're looking at something else. Yeah, my VIX. We need to have streaming VIX for me. Yeah, you know, guys, I'm sorry. When it starts, I just have to go with it, and I can't fix it till we're done. So this is new. This is new. We were doing so well for so long that now we're having, all of a sudden, we're having some issues. It's just another day in paradise, folks. You know? Maybe I could stop streaming and kick back on again. I think that stops it, though, when I do that. Let me try. So hang on, folks. So behind the scenes, I've stopped and started again in the hopes that that would fix it. And we'll see what happens here. I mean, Twitch... Have faith, Twitch is not going to fix my streaming problems. It's a Comcast related issue. Yeah, I will. This is coming straight from my OBS and we're seeing. Anyway, okay. Price consensus CPS surprise chart here. Lots of bullish behavior to the positive. Growth you're seeing. And you can't really see that much because all these lines are kind of jammed together. So what we're going to go ahead and do is we're going to look at the detailed estimates page so we can get more detail. Because all this is telling me is, yes, it's looking good, it's in the positive direction. But when you have this much scale, something that goes from 20 all the way to 240, you can't really tell the magnitude of these moves. So let's look here on the detailed estimates page. Zacks rank number 2 buy right now. Value style score of F, A in growth, A in momentum. Overall VGM composite score of a C. They are in the top 22% of our Zacks industry rank, obviously in that semiconductor industry. They're going to report after the bell. I did, folks. I did. Going to report after the bell here on February 8th. Let's look at the sales numbers. We've got 22.81% revenue growth here for the current quarter. Next quarter looks like 25.58%. Current year, we'll look at that later. But next year, it looks like it's going to slow. Now, this has been the thing that I've been seeing in Nvidia for the last several quarters is it's always somewhere off in the future. It looks like we may start to slow. But it's really never happened. It's never happened. There's this threat that it's going to slow, and then it never really does. Okay? Now let's look at the EPS side of things. Now the EPS growth for this quarter really isn't that spectacular. Oh my goodness, huge pink. Current quarter EPS growth 17.17. Next quarter looks like 14.12. Current year number 63.42. Next year, again, that All right, folks, I've refreshed. Let's see what happens. RIP net neutrality. Ain't that the truth? RIP net neutrality. Oh my goodness. You know, this is pretty much par for the course, folks, because the last several days, really nothing has gone my way. Nothing. Nothing. Can you hear me now? Are we back? And I know there's a delay, so I'm going to have to wait 30 seconds to hear if anybody can actually see me or hear me or know what's going on over here. In the meantime, I'll just go back to talking to myself, because that's pretty much what we do. I sit here and I talk to myself. It'll be better for like 2 seconds, and then it's going to freeze up again. So guess who gets to deal with Comcast after the call? Okay, so back to earnings, 17% current quarter EPS growth. Next quarter looks like 14.12. Current year 63.42. Next year slows to 11.57. So we got to figure out what this slowing is about. If you look at the agreement here, just over the last week, we got one analyst that has increased their current quarter estimate. Next quarter, one analyst has done the same. Current year, we got one, and next year, we also have one increasing their earnings estimates for those periods of time. Overall effect to the magnitude, our consensus has gone from 103 to 116 for the current quarter, 90 cents to 97 cents for next quarter. See that? Dipping. Current year 381 to 420, and next year from 419 all the way up to 468. So not a lot of growth next year, not a lot of growth next quarter. But it's so hard to bet against Nvidia. I mean, I've done it here before. Anytime I bet against them, they have a blowout quarter and punch me directly in the face. Last quarter, huge surprise, 39 cent surprise. Quarter before 32, quarter before that 18, and then 16. So, Hefe, was that last quarter when you were talking about you tried to go and buy a 1080 and all the 1080s were gone? Something like that? Or a 1080 Ti, somebody spent 30 grand on 1080 Ti's that you know. So you'd remember that. It's just my lucky day, Trevor. Just my lucky day. My lucky week. All right. Go on Amazon. What do I want to go on Amazon right now for? They're all sold out? Can't buy any graphics card at retail. Oh, well. Lots of pressure in that market. Well, that's good to know. Look at this. How cool is this? We could do that. I like where your head's at. So Hefe's got an idea. We're going to do this right now. Just try and buy any Nvidia. Look at Nvidia 1080. Graphics card. Look at this. $915. What's retail supposed to be on these cards? What was the 1080 when it first came out? Isn't this supposed to be like a $600 card? Look at that. Gonna cost you $900 to buy that. TIs are going 11. That's $799. Okay, so $799 is where these were supposed to be originally. Everything's a little bit past that manufactured. Oh, for a TI, he paid $799. And look at this TI is $1,500 right now. That's crazy. Huge demand for these graphic cards, my friends. Well, that's good to know. Now look at this. This is cool that I got this up here. This is not going to have any effect on this earnings report here, but I just wanted to show you something. They're starting to branch out into these different revenue streams. So you have automotive revenue. You have data center revenue. That's separate. You see that? You have gaming revenue. It's going to be solid this quarter too. From their Tegra processors. Automotive. So they're going to break out all these so you can see. Now, automotive isn't here yet, okay? So this is them integrating with autonomous driving cars, essentially. The sensors in all those things for various companies. Really, we're 2 years away from that right now, pretty much. A couple years away from autonomous, and that's really where you're going to see the revenue spike on Nvidia. Now, that's not included in these revenue numbers that we've been looking at, so I think that's why we're seeing the revenue growth set to stall. So 2015, 2016, 2017, 2018 here we still got 37% revenue growth. 2019 15.82. 2020 is supposed to be 15.78. Okay? So slowing revenue. Now, this has happened before where it looks like things are going to slow, and then it just never slows down. But still, look at next quarter. You're looking for $2.4 billion versus the previous year over year. Still very solid growth there. These are still good numbers, especially for next quarter. That's kind of what the market's going to look at. They're going to look at what happened last year. They're going to look at the current year. They're going to listen for any guidance. Now, it appears that Nvidia has set itself up so that they can push a little upside guidance into this, doesn't it? Because they can come in and say, well, you know, we were forecasted 15.82% growth, and we're just going to get this. How's that translating over to revenue? I just feel like these guys do a really good job of managing their expectations. 58% EPS growth. Supposed to slow just to 11.6% here. But that next quarter is supposed to be solid. It's Q3. Jeff's my resident GPU expert. Aren't we talking springtime? The next generation, next gen cards are in the spring. I think they're due up right around the corner. I think it's springtime. So there's that. In terms of valuations, this is going to be a little wonky because these numbers are going to be huge. Huge. Look at Nvidia trading 48 times forward 12 earnings, while the rest of the S&P is at 18. That's a big number. And you should have massive growth to support that number. The good news is they pretty much do. But now let's look at a price to sales valuation here. This is a little cray-cray, no? Superconductors, semiconductors rather, are basically 5 times sales. Nvidia's at 15 times sales. And again, we know the growth is there, but this is growth that's slowing. So these bad boys are definitely overvalued. I mean, there's no question. No question. Based on the assumptions for growth that the market has now. So that tells me the reason why these analysts are coming in here and buying up Nvidia. This isn't PE though. This is price to sales. Price to sales. Let's do that. I'll put your Amazon up here. Here's your Amazon price to sales at 4. Nvidia at 15. So, granted, Amazon is a much larger company. It's a different business. We can go on and on, right? It's different. And it is different. I do believe they are different. But what are some competitors to Nvidia? You could say AMD. AMD's at 2.27. You could say Intel in some regards. Intel's at 3.35. Kind of surprising that AMD is at a discount to Intel, but that's for another day. So really, who are these guys up here with? Just throwing random semiconductor companies out there. How about your friend MU? Micron, which has gone on a heck of a run. It's at 2.3. So at 15.7 times sales, they're overvalued. Okay, they are. Historically had a spike in 2011 at 4. Blew through that in 2016. Have not looked back. To sales. We could put Lamb Research in here too. Let's put Lamb in here. Let's look at Lamb. 3 times sales. Look at Applied Materials. They're going to be down there too. I think we've established the fact that the stream is totally garbage today. And everybody's going to be buffering the whole time. So I'm not going to even apologize for Comcast. You should all be very disappointed in Comcast. No, everybody's terrible today. Nothing's going my way. It's okay. Overall, S&P 500, you're talking about 3.14. And if you look at the sub-industry, which is the semiconductors, again, 5. So 3 times as rich, pretty much. But the growth numbers and the expectations are why analysts are coming in here and they're buying this bad boy. And those estimates have continued to go up too. We can look at the historical Zacks rank. Yeah, we should all be disappointed in Comcast. You know, I wouldn't be frustrated if I didn't pay $100 a month specifically so I could have fast upload on the internet. You know what I mean? I pay $150. I pay for the internet $150. Actually, I don't pay $150. Now I'm thinking about it, I only pay $75. That's the problem. Maybe I should pay for their more expensive stuff. But that's like the funny thing. It's like, hey, your cheap stuff doesn't work, so I should pay you more for your expense. Like, what? Doesn't make any sense. I can stream with my phone. I do have T-Mobile. I could tether right now. It'd probably go better. It would probably go better. All right. So they have available, they have the Gigapower, or whatever they call it. It's a gigabit internet here from Comcast. But again, I can't trust you to deliver my 150. So why am I going to trust you with more money to deliver my gigabit? Anywho. So they've been on a buy. They've been a Zacks rank buy, essentially, since the second quarter of 2017. And the stock has been going up since then. So, and this is a direct function of just those estimates pushing to the upside quarter in and quarter out, you know? All right, let's see what this company's done as a result of the earnings recently. So this shows 2 days prior to 2 days after. Oh, MU is basically, what, 3.2 times? Is that what it was? So MU is much cheaper from a price to sales perspective than Nvidia is. Earnings. Nice beat. Stock doesn't move much. MU is not overvalued. Nvidia is certainly overvalued from a PE and a price to sales perspective. Dr. Paul, I'm hooked up. I am hardwired, my friend. Hardwired in. Okay. Negative 9% move here on an earnings beat. See that? Earnings beat, revenue beat, stock goes down 9%. Quarter before that, small beat on both, and it goes up 18. Negative 4, big 25, 7. Okay. Absolute roll of the dice crapshoot. That's what this says. Absolute crapshoot. No rhyme or reason to it as far as I'm concerned. All over the place. Overall, bullish tilt, I'd say, right? You've got some 18%ers, some 25%ers. 11s, 13s. But again, how many companies have reported this quarter and done very well? So we've got this one. The only reason why I know this, I had this in Surprise Trader and it did not work out. Jumped off a cliff to the 200 day. Granted, the market was not so good. These guys disappointed. Saw a huge run up in Micron. Nothing to do with earnings, just a big rebound the other day. Intel spiked up on earnings and then gave it back. And then now enter Nvidia. So what's the good news about Nvidia? Well, good news is after getting to 250, by the way, in December, we're going to do this. In December of 2016, there's a video from a guy named Dave Bartosiak. Handsome devil. When Nvidia was under 100, I said Nvidia is going to go to 250 by the end of next year. 250. I was off by a month. The only reason I'm calling this out is because in this business you're wrong about so much that it's fun to point out when you're right. And that's fun. I was right about that. I was off by a month, which is pretty good. I got to toot my own horn a little bit. First time I went on Bloomberg ever was a call spread on Nvidia when Nvidia was in the 20s. In the 20s. Okay. Now that I'm done gloating, I need a small victory today. Just let me have it. Just let me have it. 50-day moving average provided some support here on the way down. You have a swing low. It's all the way down at 180, close to the 200-day. Volatility is up through the roof. I think you could safely say that yesterday's bottom of this 205, probably too far to Nvidia for Nvidia to drop down underneath. There's some pretty solid buying that came in there. Probably with some strumph. And you got some flack down here in the 220s. That's right. Thanks, Dr. Paul, and the Sears put. That's right. See? I don't have to remember all my victories, but that's a good one too. So 205. Okay, 205. Let's look at this front week here. So Nvidia is reporting after the bell tomorrow. Let's see what this market is pricing in. $230. Yeah, you know what, Kyle? I don't have it on this. That was one of the things I was saying about this new website I'm using. I don't have my nice horizontal volume graph. We got to jump back to our free stock charts to pull that one out. I'm sure there's a way to find that on this. I'm just going to take it's. I'm learning. I'm wading through this new site I'm using, so I haven't quite got there yet. There's a lot going on here at Zacks. Launching this blockchain innovators. That should be exciting. We're going to call this 1027 for the at the money calls. At the money puts. We're going to call that what? 972. Basically 20 bucks is what we're looking on here. Looking for $20. $20. I might have had a good Netflix one on there too. I don't know. $20 holler is what they're looking for here. We're going to change from side by side to the stack view to make this a little bit easier for us. Messing around with these front weeks. I don't know about that. Let's go over to here to March. Yeah, as far as repatriation and stuff like that, in terms of Nvidia, here's the thing. When companies do that and they take hits, what happens is they're one-time costs, and so they'll report an earnings number including one-time charges and credits, and the street generally ignores that number. Instead, we look at what is it without that one-off, right? So when I'm doing the analysis here, maybe erroneously, but it's just my thing, I take that out of the equation. I don't really worry about the one-off cost because the market doesn't seem to worry as much about the one-off costs. So why am I worrying about it? That's kind of my mentality around it. Okay. 230. Market's looking at 20 bucks. So the market's looking at 250, which is basically all-time highs. Now remember I was telling you that they probably were going to, these numbers overall are going to be goosed a little bit, right? And I've noticed it more in the skew of options versus, you know, just like the at the money being a lot of money, right? So what I mean by that is it not necessarily like, oh my God, the 230 is so expensive, but it'll be, wow, there's still premium left in the 260s and the 270s. So further out, there's still juice on the table, money on the table, money to be made. So we can do our real basic thing where we say, well, it doesn't get past those all-time highs. No, it reels it in a little bit. So you could sell that 250 call. This is the March 16th contract. 795 is how much you could sell that 250 for. 250 call. Simultaneously buying 255. 663 is your net outlay there. So this is a $1.32 net credit in your pocket. Difference in the strike prices is $5 minus that 132. 368. So you can make a $1.32 on 368 or 35.8%. Now if you notice, this number pops up a lot. This sort of 35% out at the end range of where the market is pricing in on earnings. That happens a lot, doesn't it? Okay. Now here's the thing. That was 35% going out. Another one. Let's just look at the front week. Or not the front week, the front month, rather. Yeah, that was. I remember I was kind of aggressive with it, too, and it worked, and we didn't talk about it. Those were the early days. Ah, the good old days. So look at this. Heck, we don't even have to go out. We don't have to go to all the way to 255. Just look at this one. So this is Feb 16th. This is just 1 week after earnings. The 250 call is 428. That's how much you can get by selling that 250. Simultaneously buying the 250, you're going to pay back 368. So 60 cents is your net credit here. Difference in the strike prices is 250, so that means you're going to have 190 at risk or 31.5%. Better idea, I think, for those of you that just want a little bit of post-earnings drift. Expect it to rein itself in. I think this is a decent way to go. So here, this is a bear credit. Short the Feb 16th, 250 call for a 60-cent net credit. It's a bear credit. You basically just want shares to stay at or below 250 at expiration. On the flip side, we're going to do the same setup. We're going to go down to 210. And look at what a 210, 207.50 was, okay? $210 is $310 for selling that put. Oh, goodness, blowing up my own calculator. $310 is what you're going to get for selling the 210 put. Simultaneously buying the 207.50 to give yourself some protection. It's 262. So 48-cent net credit here. Difference in the strike price is 250 minus that 48 cents, meaning 202 you're going to have at risk. You can only make 23.7%. Ugh, not as nice, right? Not as nice. Surprising almost to see that. So maybe that's not what you want to do if you're in the bullish case. Perhaps this 50-day has a little something to do with that, right? And the 205. Now here's something that I want to do. Let's look at this 205. This is 204, but we're going to call it 205. And then I'm just going to go out a little further in terms of time and see if we can't get a little bit more money. A little bit more money out here. So what if we did go to the monthly expiration, the March monthly expiration? I went down to 205. What sort of love are we getting out here? And again, I don't know what the answer is. We are exploring this together, my friends. 205, 473, minus 365, a 108 net credit. But remember, difference in the strike price here is $5. So 392 is what you'd have at risk. 27.5%. Not even there for me. No. Really, you're going to have to stay above that 210, okay? Now, there's a lot working for you in the positive direction. Assuming that the market can continue to sort of trickle its way higher. I'm actually thinking we're going to get Chop City for the market overall. Let me get rid of this fib and just look at this larger fib structure. Let's drop down from the daily to the hourly so we have sort of, okay. I think what's going to end up happening, I'm almost hoping there's a retest of this level. I don't know if that's going to happen. I think the retest is likely much higher, maybe the 2650s. And I think we're going to get some bouncing. There's going to be, I think, a lot of activity in this range over the next several months. Or not several months. Nothing lasts months anymore in this market. Several weeks. So I wouldn't be surprised if we finally find ourselves chopping around. Look, why do I think this? Because the market just hasn't done that in a while, okay? Think about the last time we had a real big shock downside, right? Yeah, it got a little ugly there for a month and a half. Of course, you have this little thing. That worked itself out quickly. But our dip here was more dramatic than that, okay? Almost to the 200-day. They really want to get it to the 200-day. I'd be more comfortable if we got there. But we do have these periods. 2015 is a good one. Just lots of Chop City. Being the momentum trader guy at Zax, oh goodness, it's painful. So I'm really expecting us to fight within this range a little bit and chop around before finding a direction. Pretty much what's happened here is Q1 or Q4 earnings, right, which we're kind of digging through now, have been good. And we have all these promises that Q2 is going to be good, Q3 is going to be good, Q4 is going to be good, right? So I think until we start to see those numbers come in better, the market's going to just chop around. So I'm expecting things to get a little hairy and it to be a stock picker's universe. As a result, some of these market leaders may be having some tough times, okay? May get choppy here for Nvidia. Still, you're not getting paid a lot, but I'm more comfortable selling down in here. I think it's easier money to be made Okay? So one thing we could do to mitigate this, let's just look at the next day after earnings. And this is a trade that you guys could look at tomorrow, okay? Now we're going to change this from near the money to showing all, okay? Let this pull up. Earnings will matter when we get them. We know Nvidia is going to beat. But if Nvidia beats, has one decent day, and then the rest of the market trudges down to retest those lows, which could very well happen. I'm hoping for just a V recovery. So here we go. So here's a thought, my friends. And this is what my thought is. If you're only going to get 20% or 15% or whatever, okay, but you can get that in one day, okay? If you can get it in one day, annualize that. It's pretty good. So you got only your 1 day's worth of risk to make 1 day's worth of money. It's not going to be mind-boggling. You're going to be able to make 30 cents, but you're going to have 2.20 at risk. You can only make 13.6% on this, but it's only going to be 1 day. You only got to get through 1 day of Nvidia not retesting the lows when the market totally was tumbling, flash crashing, intraday on craziness. All right? Not the most attractive thing in the world, not the sexiest thing in the world to talk about. But if I could find 13% a day every day, I would be a bazillionaire many times over. Okay? So this is something to consider. Ultra short term for you ADD folks. Wait until tomorrow. You actually don't even have to wait until tomorrow. I suppose you could do this today. And it's a bull credit. Short the Feb 9th. 205, 202.50 put spread for a, what did I say? 30-cent net credit, okay? Now you have $200 at risk, so be careful. If you're feeling more adventurous, you could essentially look at this chart and just say, look, it's the 50-day is going to support this also, but it could test the 50-day, and that's down at 210. So you can even do the 210, 207.50. That's going to be a 40-cent net credit with 210 at risk. So that's good for 19%. But again, it's only 1 day, right? So you just need the stock to not blow up the day after its earnings, okay? Now, if you like, you could couple that, do some condors, make yourself feel better. So we could do a 1-day condor if we wanted. We could do the 205, 202.50, and then to the upside say, well, it's not going to get past 260, right? It's not going to blast through all-time highs, is it? And we could go, here's 30 cents credit on the 260, 262.50. So when you get 30 there, you get 40 on the other one, you're going to get a 70-cent total net credit, $1.80. It's going to be your risk on a condor there. So that's 38% you can make in 1 day. And all you need is Nvidia to stay between 205 and 260 at expiration for 1 day. That might be attractive. And the further you go out, the less income you're going to receive, but the higher likelihood of getting your max gain. So there is a 1-day IC idea. 1-day IC idea would be the 205, 202.50, 260, 262.50, for 70 cents. And that's in the Feb 9th. I don't think that's a terrible idea. Again, we're thinking in terms of where we see implied volatility right now, a little bit higher because of where the VIX is. So we're selling into that. You're looking at the chart. You're seeing where the actual support and resistance is in the market. That support is certainly down here at 205. Certainly up there. So not very bullish. I'm not very bullish on this Netflix earnings report. No, I'm not. No, I don't know that it can go to 260 on this report. What's the conflict, right? You hit it on the head, Dr. Paul, when you said Netflix, okay? So what was the deal with Netflix? What made Netflix skyrocket up to this new level? How did Netflix get all the way up to 285? It wasn't the number, 41. I mean, it came in line. It was that growth. The subscriber growth overseas and that kind of thing. That's a real... That's like, oh, they opened a new market. I didn't even think about that. Yeah, that's going to get bigger. For Nvidia, yes, card sales are going to be spectacular. Everything's going to be good. But is that going to be enough for this thing to skyrocket upwards? After it's already came down. No, it was rounding out, kind of running out of gas just under 250 ahead of the earnings report. Before carving out this new range. And this is a wide range. This is 50 on two, you know? It's 20% range here on this stock that we're looking at. So there's all sorts of stuff they can announce, right? And Uber and is trying to get the first autonomous fleet, and things are going to be changing, and we know that's a little ways down the line, though. It's a little ways down the line. So I have a bullish tilt to this. I think the one day, get paid one day thing is nice. I like that. Tempted to do the one day condor. Why don't we just make that the trade that pays? Since it will pay. Trade that pays is the one day condor. I like that, getting 70 cents. I think that'll work. If you want to be bullish, for those of you who are very bullish on this stock, let's look at this. Oh yeah, that's right, Jeff. I'll do that too. Hang on. So if you're bullish on the stock, it's expensive for you to be bullish. Even if you did the half, you got to pay $4.45 for a 230, 240 call spread. Kurt, I don't think that's too aggressive. If you think that Netflix is going to go up, selling because all you needed to do is not go down by $5, and you're going to make your $2. So I don't think that's too aggressive if you think Netflix is going to go up. Getting vertical with the call spread here is going to be very expensive, and the bang for your buck just isn't there. You're going to have to go out of the money on one of those ends, and I don't know if that's very attractive for you. So there's that. A nice little collar strategy. So here, for you folks out there that are already long Nvidia, how are you going to protect yourself? Okay. So essentially, you already are long 100 shares of the stock, right? But you want to protect yourself in case the stock really takes a tumble. In my idea, really taking a tumble is underneath this 205 level. So it's going to cost $2.23 to get that protection down at 205. So essentially what you're going to look for is where can you sell a call where you're going to get $2.23 in order to go long this 205 and get yourself some protection down there. Well, 225 is all the way out at 260. 223, so that's just a few bucks different. So if you own the stock and you want to protect yourself on earnings, buy that 205 call, or I'm sorry, buy the 205 put, sell the 260 call to finance it, and you are all good, free and clear, and you've allowed the options market to ease your fears about Netflix dropping. If you have some cash on the sidelines and you really want to go ahead and put it to work, yeah, I'll type this collar. Collar strategy would be selling the 260 call, buying the 205 put, both February 16th expiration. That will protect you from your issues. Okay? Protect you in case Netflix really takes a tumble. Now, if you have 100 shares of stock, or you want to buy 100 shares of stock, and you're looking at Netflix going, well, I don't really know. I'd rather it come down to this sort of 210 level, back to the 50-day. You can go ahead and sell. Just sell that 210. You're going to get 310 in your pocket. Netflix comes down below 210. Those shares are going to get put to you at 210, but your cost basis is going to be 206.90, so you will be victorious. So if you're long-term bullish on Netflix, there's another idea for you too. Okay? All right. Well, I'm going to drive to my local Comcast and throw a brick through the window. Just kidding. I would never do that. I don't know where to find bricks. But I am going to call them up on the phone and ask them why they hate me so much, even though they love cashing those checks. They just cashed that check. So we're going to try and figure out what is going on with the frustration here. Just another day in paradise. Actually, technically, just another day in sunrise. Living the dream, my friends. Thank you so much for hanging out with me here today on Zach's Live Trader. Struggling through the streaming mishaps that I've been having here today. Again, it is what it is. I'll see if I can fix this thing behind the scenes. Hopefully I will. I've had this issue before for weeks and never worked out. So what else can I say? Tomorrow is the GBU. Friday is a morning after session. It will be the morning after Nvidia. So we'll see what's happening. I'll be hands-on with you Friday at 9 a.m. Central. Aside from that, that's all I got. I apologize for the stupidity that is this stream. And aside from that, that's it, my friends. See you in the chat. Have a good one.